What's going on, guys? It's Justin from Push and Profit. Hope everyone's having a beautiful day today. Now in this video, I want to go over the difference between a limit order and a market order. Now recently the market's been very hot and there's been a lot of individuals making money, and of course this attracts a lot of new individuals to want to get into the stock market, which is fine, completely fine. However, the thing is, when new individuals first become exposed to the market, they might not necessarily know the difference between these two types of orders, and it can make a big difference when it comes, into trading or investing, right? It makes a huge difference when you go into this market. Now, at the end part of this video, I want to go on my computer and do some simulated trades to give some real life examples. So make sure to watch this video to the end to get the most understanding of this video, right? Or out of this video. Now, regardless if you're day trading, swing trading, or even doing long-term investments, when individuals place an order to buy or sell a stock, there are two fundamental execution types, which are limit orders and market orders. Now, when you buy a stock with a market order, you are 9 times out of 10 not going to have the trade be executed at the best price. And this is because the price of a stock can change every second, right? So when an individual places a market order, what happens is that the trading order gets executed at whatever the price the market is currently at, right? And again, as I mentioned, the price of a stock could change every second. So for example, let's say XYZ stock, right? You see it trading at $1 per share and you want to buy XYZ stock because you think it's going to keep going up, right? So you place a market order to buy 1 share. Now, when the order gets executed, you might see that you ended up purchasing one share of XYZ stock for $1.10. Now, the reason why you might get filled at $1.10, even though you clicked to buy it when it was at only $1, is because the price of a stock can change every second, right? And with the market order, you aren't specifying what price to buy it. You're simply just putting the order to get filled at whatever price the market is, right? And again, the price changes every second. Now, this can be a big problem, especially when you're purchasing or selling a lot of shares, because, that extra 10 cents can add up to a lot. And it could be the difference between you being able to make a profitable trade, breaking even, or even losing money on a trade. Now, most of the time, it's not a good idea, right, to simply just buy or sell with a market order. Now, there are some specific cases where you might end up needing to use this type of order. However, I'll explain that later on in this video, right? Now, for example, let's just go on to limit orders. Now, for limit orders, you place and buy, that's where you place and buy a stock at a specific price. So for example, if you want to buy XYZ stock for $1 a share, you would put a limit order to buy XYZ stock at $1 per share. Now, if the price moves up, your order will not be executed because you specifically only want to pay $1 per share for XYZ stock. Now, if the price goes up and then drops to $1, then your limit order will get filled for $1 per share and it will get executed. So you have more control on what you're buying or selling. Now, going back to a market order, why would anyone want to use a market order if it doesn't buy or sell your stock at a specific price? Right now, the reason you might want to use a market order is when a stock is moving so fast that when you place your limit order to get filled trying to buy XYZ stock for $1 and it just keeps moving to $1.02, $1.05, $1.06, your order just doesn't get filled, right, at $1. So in order to catch that trade, you might just place that market order just so you could, get into that position, right? And you just you don't care what price you get into, you just want to get filled. Now you could, do that, right? So what I'm gonna do, guys, is I'm gonna go into my computer. I'm gonna try to do like a simulated trading or paper trading to simulate some examples and explain this a little better. But before I hop into my computer, just do one thing. If you guys could just gently tap that exquisite like button, it really does help with the YouTube algorithm. Also, subscribe to the channel if you haven't done so already. All right, so I literally finished recording this, tutorial example on my computer screen, and then I realized I didn't have the mic on, so like it was all pointless, so I'm re-recording it. So if you guys could really just hit a like, leave that like button, because sometimes it's just frustrating with the whole recording process. But anyways, you guys don't care about that. I'm using the TD Ameritrade Thinkorswim platform for those of you guys that might ask. That's like one of the most common questions I always get. Now, is it the platform that you have to use? Of course not. There's so many other platforms out there. It's all up to you, right? Now, I'm using the paper trading on demand mode, which means that I get to trade the market, like the real market, but with simulated money. So it's like a good tool to kind of practice and learn the market, which is something I recommend for everyone, right? So let's go ahead and take a look at what's going on the screen right now. We're looking at ticker symbol SMH, right? And it's not shaking my head. It's actually something to do with semiconductors, right? But anyways, it's just ETF that I'm looking at now. I'm not in a position, right? So let's go ahead and buy into this stock. We're going to go ahead and click buy. We're going to head and click edit. Now it's already on limit order on default, but let's go ahead and hit market order. Right now, notice with market order, it doesn't say a price because we're buying it at the market. So right now it's currently at $113.35. Let's go ahead and click confirm to do that market order. All right, cool. Notice how right now it filled out $113.34. That's because, you know, it could work out where it'll actually buy it lower. It could work out where it actually buys it higher. You know, at the end of the day, you know, you have market movers who like they control what's going on with the, you know, the bid and the ask. And also because, you know, the stock price moves like constantly. So when you do a market order, you're just literally getting filled at whatever the market price is, right? So it doesn't matter. It's just gonna try to fill you in to get you you know, into that position as quick as possible, right? Now I said 9 times out of 10 when you do a market order, it's not going to buy it at whatever price you wanted to buy it. In this case, it kind of worked out because I clicked it at $113.35, and you know, when it did the market order and it bought it for 1 penny less, right? Cool. But you know, there's also times where I'll buy it for like 20 cents more or even 10 cents more. So and you know, it doesn't matter, especially if you're trading with hundreds of you know, dollars or thousands of dollars or even more, right? It makes a big difference because especially if you're trading penny stocks, right? You know, it makes a big difference. Every, you know, penny counts, right? Now let's go ahead and just get out of this order. I'm gonna hit sell market and boom, right? So cool, I just lost $7, right? Whatever, right? Now let's go ahead and try the same example but with a limit order. So let's go ahead and hit buy. Let's hit edit. And right now it's trading at $113.27. Let's say I don't want to pay any more than $113.22, right? So I'm on a limit order. I put the price to this amount. I hit confirm, send. Notice how my order didn't get accepted right away, right? I'm still waiting for it to hit that price because I want to enter at a good deal and I don't want to pay any more than, you know, $113.22, right? Now, by the way, I'm just putting this in randomly. I'm not doing my normal technical analysis. I'm just going in randomly, right? Because it's just an example, right? So I still haven't gotten filled. Now, like I said, there are times where you might want to do a market order where you see that a stock just continues going up and you just can't get filled. So you might either move your limit order to like, let's say 20.23 cents and you're like, oh man, I'm still not getting filled. You move it to 24 cents. You're like, oh man, I'm not getting filled. So then you might just cancel your order and hit market order, right? Just so you could get filled in, right? Just so I could get filled in. And then, you know, let's just sell it too. Let's just get out. Cool. So notice how with a market order, you're selling and buying and you're just going in right away. It doesn't matter what price, but with a limit order, you're setting that price, right? Now let's go ahead and just buy and sell with a limit order just because I feel like, I don't know, I just want to show the full example of like it getting filled with a limit order. So let's go ahead and hit edit. Again, it's on limit order. Right now it's at 0.24 cents. Let's go ahead and say we just want to pay 0.23 cents, right? Cool. It fell down at 0.23 cents real quick, and then it came back up, and so that's why we got filled, but now it's down to, you know, 113.22 cents, right? And then again, to sell it, it's going to be the same thing. I'm going to hit sell, hit edit, and let's say, you know, I was like, well, now I'm actually losing money, but let's go ahead and say, okay, you know, I'm going to sell it exactly $113.17. Anything else in that, like, I don't want it to get lower. This is exactly what I want to sell at. So you hit that, boom, and you got sold. And the reason it sold right away was because the price was already higher, right? So yeah, hopefully the way I explained it in the beginning of this video and also, you know, seeing the real life examples do kind of help you understand that, hey, when you do a limit order, you are agreeing that you only want to pay the specific price. You don't want to pay any more. You don't want to pay any higher, and your order won't get filled unless that price is reached. And then same thing, you know, with the market order, what's going on is you don't care what price, you know, you're just trying to get filled in because, like I said, you just want to get filled, right? For example, let's look at something like Tesla. Tesla is something where I day trade it. Oh, wow, it's crazy. It's looking crazy right now. Let's go ahead and just go to Apple. So the reason that chart was looking crazy, oh, Apple's looking crazy too. See, when you're using the on-demand mode, the paper trading, I'm not going to lie, on Thinkorswim, I do notice that sometimes it does get buggy. So sometimes you want to practice trading and it kind of acts buggy. There's other platforms or brokerages out there that offer paper trading. For example, WeBull is another broker that you could paper trade on, so you could practice. I feel like they have less issues. And I do have a link in the description where if you sign up with my code using WeBull, you'll get 2 free stocks after you deposit $100. So, you know, quick plug, but definitely check that out. But anyways, yeah, so right now we're looking at SPY. And yeah, so SPY is something that it does kind of move, but it's not as volatile as Tesla. I kind of wanted to show you guys a good example with Tesla. But yeah, you know, there's certain stocks where you just don't catch the move. For example, let's say I put a limit order down here at like 289.51 cents, but the stock just keeps going up, and I'm not getting filled. So what you do is you do your market order just so you could get in, and then, you know, at least like get some of the play, you know. But with that being said, hopefully you guys got it. This is the second time I record this video. Make sure to hit that like button. By the way, guys, if you check the description, right, of this video, I do have a link. It's going to be the first link. It's going to be a link to the Push and Profit Facebook group. And basically that group is just a community I'm building of individuals interested in trading in the stock market. And I do try to post a nightly watch list into that group. And in that watch list, I put in what stocks that I'm focusing on, what stocks that I'm holding long term for investing. And then I also put a list of stocks that offer potential for a profit for trading. Right now, just because I have stocks listed in that watch list, it doesn't mean you have to trade it. Just because I see value in those stocks in that watch list doesn't necessarily mean that you have to trade those exact stocks. Just, you know, I try to put that out there just as a little guideline or reference, like, hey, you know, maybe you guys might want to look at this or look at that. So anyways, if you want to get access to that watch list, make sure to click that link and join that free Facebook group. Again, it's just a community. And with that being said, guys, my name is Justin from Push and Profit. Hope you guys are having a beautiful day today, and I'm out. Take care.